guys can be quiet and behave, right? Hey. You good to go?
Ready to go.
We are.
Are we rolling?
We are rolling. Episode 21.
21. Hey, welcome everybody to the Broker Loaded podcast. This is a podcast all about real estate. The real story about real estate. Real talk about real estate. That's what we do here. I'm Kurt Studley. I'm a realtor.
I'm Dan Grimes. I'm also a realtor.
He's also a broker. He's not saying that anymore.
You had to bring it up.
Right. I'll bring it up.
Like I say, every time you bring it up, it means nothing. Easiest course I ever took.
We have another special guest today.
We do.
Right? All of our guests are special, Ingrid. All of our guests are special. But you're the first mortgage broker to appear on the Broker Loaded podcast. Ingrid Patry is here. How are you?
I'm great. How are you guys doing?
Good. Great to have you here. Thanks for coming by.
Yeah.
Tell me, Ingrid, the name of your company that you're working with at the moment.
Yep. So I work for Invis Mortgages. We're a national mortgage broker company, straight from the East Coast to the West Coast. And I've been working with them now for about 20 years as a mortgage broker.
Yeah.
But in the banking, finance-related business for over 30 years.
Yeah. So you've been helping people buy homes for a long, long time.
Absolutely.
Yeah. That's what you do.
Yeah. Financial plan their plans to gain home ownership.
Right.
Work out what's best for their own personal scenario.
It's a beautiful thing when that happens, isn't it?
Absolutely.
Like you get personal joy out of that.
Absolutely.
It's just like selling a house to
Selling a
people,
house.
right?
Yeah. I couldn't agree more.
There's nothing better.
Yeah.
Like when you're in this sort of line of work, there's nothing better than seeing that all happen for them.
Yeah.
In the end, that's what counts.
So Ingrid, before you got into the brokerage business, who were you working for? What institution were you working for?
I worked for TD Canada Trust. So I started with Canada Trust and then moved into, then they were bought out by TD Bank.
TD.
So we switched over to TD Canada Trust.
Right.
And nowadays it's really just
I remember
referred
when
to
it
as
was
TD
just
Bank.
Canada Trust.
Yeah, I loved it.
Yeah.
Loved it with the Johnny Cash machine.
That's right. Yeah.
Absolutely.
Yeah.
Yeah, it was a really, it was a very vibrant work setting, I found.
Yeah.
Working
So I
for a
was at
trust
the
company.
Permanent back then,
Yeah,
which became Canada
Yeah.
Trust because Canada Trust bought
the perm. Yeah.
the perm.
Yeah.
Yeah.
Perm.
Yeah, because they had an office over at Pinecrest Mall, I think.
I think
or
they had
something.
5 or 6 of them in town here. They had
Billings.
Yeah.
When you say Pinecrest Mall, is that the IKEA mall there?
Yeah,
That's what it is?
exactly,
Okay.
yeah.
All right.
My dating, that was Neil Lure, wasn't
Yeah,
he the
Neil Lure.
manager there?
And Wilma Wilson went over to the Canada
Wilma,
Trust bench.
yeah, she was at Hampton Park.
Yeah, you
Jeez.
got it.
I go back.
Well,
go
I know.
back.
I mean, this goes back your days of wandering the farmlands in and around Ottawa,
That's right.
right? That's how
Yeah.
far it goes back. Ingrid, we're going to talk a lot about mortgages and mortgage rates and interest rates and all that stuff today.
Absolutely.
It's a very interesting world. It's we as realtors often people talk a lot about real estate. There's no question about that. They've certainly been talking a lot about mortgage rates in recent times.
Yep.
No question about it, eh? It's
Big topic.
It's been a weird few years.
Yes, it has. And sort of like now is a perfect time to talk about all of this kind of stuff because traditionally we always have a spring market, right?
Right. Yeah.
And more people come into the market in the spring. Also, lots of other things happen in the spring, like hockey playoffs. So,
Right.
do you guys follow hockey at all? Or
Yeah. Yeah, I know you do. I know in your household. Are you a Habs fan as
I
well
am.
as your husband?
Yeah.
I'm a
there's
Habs
fan there. I'm a Leaf fan, and considering, this is the day after Game 1 of the playoffs, just so you know, when we're recording this episode,
Yes.
I am not a happy man today.
No.
I'm not happy at all.
You asked that. You brought up that topic. So
I mean, my team is in the playoffs. There's that.
that is a point.
no, he does. It's a valid point.
I consider myself, Ingrid, to be a good Leafs fan.
Okay, good.
I'm not the bad Leaf fan.
Okay.
No.
Right? I understand why you hate our team, the people who hate the Leafs. I get it. I totally
don't.
get it.
I don't.
As a Habs fan, I don't. Explain it to us.
Listen, as a hockey fan,
There you go.
my heart breaks every friggin' time, and you know what it's all about. No matter what team you follow,
Yeah.
you've had heartbreking moments.
Yeah.
Right?
I've had a few.
So that's the kind of fan
But
I
you're
am.
a
and
Canadian team, so we
It's
should all
killing
root.
me. It's killing me. I can't sleep. Anyway,
All right, sorry, maybe that was a topic I shouldn't have brought
Yeah.
up, but yes,
I don't even
springtime.
know what we were talking
We were
about.
talking
anymore.
about
Oh,
springtime markets
Right,
and
right.
rates and yeah.
right.
Let's bring it back. circle
Yeah.
around.
It's
going to get better, Kurt.
Yeah, maybe. Let's hope so. Spring market means a lot more activity usually, and I
Yes.
think we're seeing a substantial spring market this time around.
Yeah. So what I always gauge my sort of like portion of the role in a home buying process is when I see a lot of activity when it comes to pre-approvals. So when I have a lot of clients that are calling me, emailing me saying, hey, I'd like to get a pre-approval. I want to know how much I can afford.
Sure.
What are the interest rates? That kind of thing. I'd like to jump into the market. I think I'm ready. So when I see a flurry of activity that way, then it always seems to filter through to you guys, right? Because once they're ready to go,
and we want to thank you for that, Ingrid.
Okay, good. Get them ready. Get them ready. I always tell them, like, you're going to have so much more confidence, and your realtor is going to be able to show you exactly what you now can qualify for.
Well,
you might not want to spend that much, but might have to.
That first step of talking to a mortgage expert like yourself is a critical one. I mean, it's one of the most important decisions you can make along the way.
Right.
How you're going to approach it financially.
Yeah.
I mean, that's step number one. Otherwise, you wouldn't be talking about it in the first place, right?
I think it's the first thing as realtors we suggest people do.
Oh, absolutely.
100%.
Absolutely.
Maybe walk us through the pre-approval.
So basically, it gives them knowledge and it gives them confidence. So from somebody approaching me to say, hey, I'd like to get a mortgage pre-approval, or actually somebody even just contacted me to say, I'd like information on mortgages, let's talk about providing you with a mortgage pre-approval.
Right.
So that we can figure out what you can afford. So then what do they say? Well, what do I need to know? What do you need to know from me?
Right.
And I'll say, okay, I need to know, a lot of things that you could tell me in your sleep, but things like where you work, how long you've been there, are you salaried, are you hourly, commission, self-employed, what kind of documents will a lender want from you, what are the steps once we get you pre-approved, we can get you a rate hold. Rate holds are very valuable in case rates blip up again. You've always got the lowest rate guaranteed.
That locks in your rate, the rate
for
hold.
120 days, And then the other thing I always tell them too is, and if rates are going down, then I rate protect you on the way down too.
Right, so if it changes during your rate hold period,
Yeah.
it will adjust.
Yeah. We discuss
That's nice.
different rate options, whether it be fixed or variable. Some of the terms, we discuss how it works then with their realtor. When they go out, look at houses, fall in love with the house, I usually say, once you're pre-approved, I hear back from clients a lot more and far more with faster speed than I do that those are not, that are people that are not pre-approved because they're ready to go. And now it's the fun part. Now it's the fun part with you guys to find the house.
Although we should point out that pre-approval is not the same as approval, right? There is a slight difference.
Absolutely. So on a pre-approval, my clients will sign a consent form and they have to provide government-issued photo ID. And once we have that, I can run their credit score through Equifax. And now I know pretty much what they owe, what their score is. Are they meeting all the minimum requirements for a mortgage? So it's not just some sort of pre-qualification letter to say, oh, Kurt, you told me you made X amount per year and you have X amount to put down. Well, let's make sure that that's the case. Send me a T4 from last year and a current dated pay stub. You don't have to send me a job letter yet because we're going to need that down the road. Why ask for that twice, right? So get some paperwork up front, get that credit score to ensure that they're in the right place. Ask key questions like, have you been separated or divorced? What's your marital status, right? Because those sorts of things, you don't want to come back to bite you either when you find out that all of a sudden they owe X amount per month in support payments, right? And that will have a direct impact on their mortgage and their borrowing power.
Provided that all the information that they've given you is accurate, they can contact Kurt or myself or the realtor that they're working with and proceed with confidence.
Yeah.
Right. The pre-approval is that confidence boost. It's knowledge, like you say, and knowledge in this case is power. Yeah. Because it gives you the ability to start shopping for a home.
Exactly.
So very different than applying online.
Absolutely.
100%.
And it's human contact. And I think, people have gotten away a little bit from that, but I feel like there's a shift again to come back more towards that. And maybe not
that face-to-face, that actually talking to people.
Yeah. Or even just Zoom or phone calls as opposed to just sending out emails, because so much misinformation can happen in emails, right? As opposed to when you pick up the phone and actually speak to somebody or meet with them.
There's something about the lack of tone tone that you may perceive in a text or email that doesn't happen when you're speaking to someone either on the phone or in person. It just doesn't happen because you know what they mean. Sometimes, the meaning of things or how things are perceived are different than what they were intended to be when it's, written down in a text quickly, So, the human contact factor is key, right? Makes people, when you talk to someone who knows what they're talking about and you can understand what they're saying to you, translating that information, it makes you feel comfortable. And this buying home process, if anything, you want to make people feel comfortable.
And it's not an intimidating process either. I find it, most of my clients find it a lot more comfortable dealing with, no offense to the banks, but with a mortgage broker.
Well, and that's something we can talk about too, because you are independent of any bank. You're with an institution that specializes in this sort of activity, right? And that's what you do. There is an option for everybody to, mortgage shop, for lack of better terms, right? And sometimes they want to talk to their bank, and there's nothing wrong with that.
Well, listen, that's the main reason that I actually broadened my horizons and became a mortgage broker and left the bank because I realized that, yes, I was working for a great bank, but could I actually say to my clients, I have the best product, the best rate, the best of everything? I didn't feel I could, because how could I when I was selling only one product?
And there are no options.
No.
Right?
Right.
Well, yes, there are options in terms of what type of mortgage and what setup you have, but it's, this is the set sort of menu you have.
Exactly.
There's no going off the menu, right?
No, exactly. So then I thought, if I'm really going to do any client or all my clients a good service, I have to be able to offer more than one product. More than one lender product.
For sure.
And this way we get rates every day. And these are wholesale rates in the sense that they are competitive. They issue them daily. We see them daily. We get rate specials that are sent to us as well.
Right.
So there's all kinds of things that, and the other thing too is...
And you're on top of that. So your clients, the people you were working with, you're going to let them know if there are advantages that they can build into into what they're doing.
And I always say to the clients too, you're, as a consumer, you should have every right to shop. But if you go with someone as a mortgage broker, we're going to shop the market for you.
You're doing the
Okay,
job.
well, that brings up a question that most realtors probably know the answer to or advise. Maybe we can clarify it with the credit reporting.
Yes.
So is it a myth or a fact? If you go to a mortgage broker, they're sending, because I've seen your system work kind of, and sometimes I relate it to our MLS system. Mm-hmm. Somebody is qualified for this, you fit them into a slot, and these homes come up. Mm-hmm. I've seen a similar system where you'll punch in the client's information, and then the people that will deal or are willing to deal with that type of profile. Am I right or wrong about that, your system? But my question being, if they go to you, there's only one credit check. If they start shopping at the banks, does every bank run a credit check, and how does it affect them when that happens?
So that's a really good question, Danny. So
it's a long question, though, Danny. That was a really long question.
But it's a good question. So it's a bell ringer.
You want a bell ring?
I do. And it's a good question. You get a bell.
Well,
I'm not allowed to touch the bell. We didn't explain the bell.
It's my bell, Ingrid. And I don't like anybody else touching it. I'll be honest with you.
Yeah.
Okay.
Listen,
because I was going to reach out when you were pointing.
If you had rung the bell, I would have no objection. No. Right? And if you really want to do it, you can do it.
This podcast would not have aired.
Oh, we'd have to start over. We'd have to start over. Anyway, long question. You remember what it was?
Yes, I can tell you.
Okay, good.
Credit checks.
So basically, yes, if you
I don't know why I spoke about the other.
Each different lender. Well, I should preface this by saying, when you deal with a mortgage broker, you're going to get access to lenders, Canadian mortgage broker lenders. They're pure mortgage broker product.
Right.
That's it. Pure
That's it.
mortgage product. They're not going to try and sell you a bank account or a credit line or a Visa or
They're
anything like that.
interested in lending you money so
Just
you can
lending
buy a
money.
house.
Exactly.
Right.
So you're getting access now to top mortgage broker lenders across Canada. You would not be able to shop them on your own. They don't deal with clients through a mortgage broker.
Okay.
Yeah.
Right.
Okay.
So now if you're going to go shopping to a bunch of different mom and pop bank lenders, every time you step in, you're going to have to disclose all your information. You're probably
Right.
going to have to bring in all your stuff again
Right.
if they're doing their jobs the right way and you're getting someone who's maybe a senior person or something like that, right?
Right.
And maybe you're getting someone who's brand new in the job. They might not even
Right.
have the information that your client really wants or needs.
Yeah.
Right? Sounds like you may have experienced
I'm
that.
sort of getting frightened right now.
Yeah. so then yes, their credit check is going to happen each and every single time. Whereas if they go to a mortgage broker, we pull it once.
Right.
We now see what it is. We on our system that uploads a file to our lenders, and we do deal with some of the chartered banks as well. They're going to use our pull on the credit
Right.
score. So it's not going to be a constant stream of credit score
Checks.
accessing
Yeah,
and checking.
yeah. That's not good.
Yeah.
See, if I'm working at a bank and I'm running a credit check on somebody for pre-approval, common sense tells me if I see that he's gone to bank A, bank B, C, D,
Yeah.
he's shopping.
Yeah.
He's shopping for his best rate. So, I'm sitting back.
Why not have a professional mortgage rate shopper do that for you?
Yeah.
Right.
Save yourself a lot of time.
It does.
It
And
does.
plus, you have access to things that, Joe Public and Joanne Public do not have.
And the average person, they get a little stressed out when they think about, they're going to ask me all these questions
Right.
about
Yeah.
myself.
Yeah.
They're going to know everything about me. They're going to know how much I make. They're going to know what I have or don't have in the bank and investments, right?
Right.
And people get all stressed out about that.
Yeah.
It's private information, and then they share it and share it and share it, right? It's time consuming too. So doing it the one time and with someone that you're comfortable with, that you feel that you can work with, right? I'm sure you guys feel the same way. I mean,
Yeah.
clients have to feel good about who they deal with, right?
No doubt about it.
And
Yeah.
comfortable and know that they're being taken care of.
Yeah, it's the same philosophy that we employ as
Yeah.
realtors. There's no question about it. Right?
And it's not an intimidating process to go in and meet
No.
with somebody like Ingrid.
No.
You know?
God, no.
And the other thing too is it's the after service. If you're dealing with your bank branch, for example, because
Right.
maybe that's what your parents wanted you to do, right? Well, what happens after that mortgage funds? Now you own the house.
Yeah.
Now you go back in because you have a question. Well, Johnny Sue is gone. And now you're dealing with someone else who doesn't even know you, right?
Right.
Whereas if you deal with a mortgage broker, they should be anyways. If they're good, they're going to be offering after service on that mortgage, and I'm their first point of contact. I always say to my clients, after your mortgage funds, you will hear from me, and I'm your first point of contact.
Yeah. So at the end of the day, and we reiterate this a lot during our podcast, if you are thinking about buying a home, your first step is to get pre-qualified, without a doubt.
Right.
At what stage then, pre-qualified, when do you get the commitment?
So then I say to my clients, now the fun start happens, happy house hunting.
Right.
You go out with your realtor, you go out with Kurt or Danny, and you find the house you want. They're now going to go to action. They're going to negotiate the sale price for you and the terms that make sense for you on that house that you want. Now you've signed it, it's successful. Danny or Kurt's going to send me a copy of the agreement of purchase and sale. They're going to send me a copy of the MLS listing.
Yeah.
I'm going to take that. We're going to chat. We're going to figure out exactly what you want. Let's fine tune this. I'm going to send it off to the lender, get you your mortgage commitment. Takes generally same day, 24 hours at the most.
And that's done within the time frame of the financing
Yeah.
condition.
Right.
Yeah.
Right.
We know that, but
Yeah.
maybe the public doesn't, or that first-time
Yeah.
buyer.
And then we get the mortgage commitment back. You guys will sign some documents, and we take it from there. You're going to let me know who your lawyer is, and then we send your lawyer all the information. And,
Right.
Yeah.
Right.
So Ingrid, did I hear you say, this is my lean forward,
Uh-oh.
This is when it gets serious.
Yes.
Great.
Okay.
did I hear you say, once it is sent off, that often you get the commitment within one day?
Yeah.
once you sent the package to the lender?
Well, I'll never have a 7 to 10 day financing clause again because I can send it to Ingrid
Yeah.
and she'll have my commitment in a day.
Yeah.
What?
We'll give her 5.
Well, the usual period is 5.
Yeah.
Yeah, I
But
mean,
it's
you
7.
can.
Yeah, 5 to 10.
If
But in certain deals, like often we're faced with this, right? In certain deals, you might want to have a shorter condition.
Absolutely.
Because
Yeah.
it puts you in a
More
better
competitive.
position, right?
And we are seeing the multiple offers are on the rise again.
yeah.
Yes.
They are.
Yes, they are.
Yeah, so I guess when we would talk specifically as your client's putting that offer in to say, okay, what's the list price? What are they going to offer? Just to make sure that, it's, well, if it's $100,000 more than asking, which we did have that situation happening,
Right.
back
Not long ago.
Not too long ago.
Seems
right?
like a lifetime, though, doesn't
So
it?
what happens if a lender? It does. It
Yeah,
does, because it's
it's
been a little
well.
bit of a more snail's pace,
Yeah,
right?
yeah.
Yeah. So, do we need to worry about whether a lender will want an appraisal? Those are the sorts of things that you need to talk to your mortgage broker about as
Yeah.
your client's putting in an offer.
Right.
Just to ensure everybody's on the same wavelength, that we're all working together. And clients love that. When their realtor, their lawyer, their mortgage broker are all a team and working together, they get a good sense of, we're good here. We're covered. These people have us, right?
Yeah.
Yeah. You brought up the appraisal, and I remember, again, back in the day, the appraisers always went in during that conditional period. I mean, they've gotten away from that.
Yeah.
It's been easier to appraise homes. But because of the up and down in the market right now, there still are people, that are paying what could be described as a little over market value now. So what happens if the appraisal comes in, let's say 5% or 10% below the purchase price? How does that affect a buyer's down payment?
So what's been really good is we have, with all of our lenders, everybody has an automated valuation system, a model.
Right.
And it is mimicked on CMHC, the insurers, right? So they all have an auto valuation model that they use for their own purposes for clients that are taking out high ratio insured mortgages. So putting less than
course.
20% down, paying that one-time premium. So all the lenders will shoot to use that system first because it's easy. So if it fits within a range, then we're good.
Yeah.
If it doesn't fit within a range, then we're not good. And that's where we were running into some problems back in that heyday. That's not so long ago, right, Kurt?
Right.
Yeah.
Where I could give my client as much confidence as possible that you qualify for that mortgage amount.
That doesn't
I
mean the
can't-
house is worth it.
Right, and so I can't tell you if that's going to value out at the lenders.
Right.
And now if it doesn't, you got to be prepared to come up with the difference
Right.
in cash.
Yeah, you're on the hook
And
for it.
on a 5% down deal, those were the ones that were really hard.
Because that's all the cash they
That's
had.
all they had, right? So you had to be more careful about encouraging a client with 5% down to offer $150,000 more than asking, although, and that's your business.
Even though they might
but
have qualified.
sometimes
Yeah.
list prices were set to create and generate multiple offers.
So,
What?
yeah. But is that...
Is that what was happening?
No, that never... I didn't witness that
my God.
I never witnessed that in the 3 years. Not once.
Not once.
No, not once.
No, my God.
I've been doing it a long
that
time, but I've
clients-
never experienced anything like that.
We had 403 showings,
Yeah. So,
68 offers. I wonder why.
Yeah.
what was the company who was basically advertising giveaway prices? I forget the name.
Oh,
of it.
yeah.
Yeah. No, I
might
don't
as
need
well
the
put $1
gallery.
on
I know who I'm talking about.
All right. Hey, listen,
No.
you're watching the Broker Loaded podcast, a podcast all about real estate. Ingrid Patry is a mortgage broker. Invis, right?
Yeah.
Is your company. And we're talking about mortgages and strategies and all that sort of thing. Let's switch gears because you know what
Yes.
everybody's talking about is mortgage rates.
Okay.
That's
Let's
what
get to
everybody's
the
talking about.
nitty gritty.
And I think, I don't know for sure.
We have a lot to cover
I
here.
think there is that's a nice Expos hat. I don't know for sure, but I think there may be a lot of misinformation out there. I really do. About mortgage rates and how things work and where we are currently and what it all means.
Fear-mongering.
I think there's a lot of people who put information out there that really don't know for sure what they're talking about. That's what I think.
Yeah.
So you're on the front lines when it comes to this. You understand what all this means. Give me a synopsis, if you would, as to where we sit right now, mortgage rate wise. I feel like we're not in a bad position. What's your assessment?
So I'll preface this by saying that I don't have a crystal ball.
No.
Right? But I've been in this business long enough to have seen a lot of the cycles that we've been through over time. And I can tell you that interest rates right now are at all-time historical lows. Are they as low as they were a year, 2 years ago?
No.
Absolutely not. But you know what? Nobody should have ever expected that interest rates were ever going to stay at 1.5% to 2.5%,
No.
right? And the reason we know that we should have never expected that is because the federal government was making us stress test all mortgages at 5.25%, a benchmark rate, when a client was getting 2%.
Yeah.
So that was telling you something, right? Should they have increased on a longer term instead of bang, 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 0.75, 0.5, like all of a sudden in less than a year, should they have done what they did? Maybe they should have gradually, a quarter, and gotten people a little more used to it.
Right.
But it certainly had the much needed effect, which was inflation numbers today. Just saw it on the news, down to 4.3%.
Yeah, finally we're starting to see that claw back a little bit.
We're on a hold. The Bank of Canada has held now the last 2 meetings. They're meeting again June 7th, and then they'll have 4 more meetings this year, July, September, October, December. The tone has changed, and we are thinking, although we don't trust them anymore after what they did.
No.
But having said that, we should have a fair indicator right now based on rates, and going back to rates. When you see lenders, and this is across the board, pricing their short-term money, the 1 and the 2 year fixed, and the variable rate at much higher rates than the 3, 4, and 5 year fixed. Now you can get longer, 7, 10, but generally let's skip out of that because we don't really need to talk about that right now.
Right.
So the 3, 4, and 5s are much lower than the 1 and 2. The banks and the lenders across the board, I think, are trying to capitalize a little bit on the fact that everybody knows that interest rates are going to drop again. And the Bank of Canada has told us that all along. Once we get inflation under control, there's going to be some good news
They'll
in the
ease
future.
back, yeah.
For sure.
Will we see 1.5% to 2.5%? Unrealistic.
No, exactly.
But I think we could level out perhaps at around 3.5% to 4% on a 5 year fixed, which would be amazing. I don't know if I've told you this story. Maybe I have, but when I worked at the bank several years ago, actually back in '94, rates were falling. They were coming under 10%, and people were starting to get real excited about this because a lot of people, as you guys would know, having been in the business as long as you are, a lot of people were in higher interest rate mortgages.
Yeah.
Oh,
double
geez.
digits.
Yeah.
Oh my God, yeah.
And when we got to, people were saying there's
Single
no way we're going to
digits.
see 5%.
When we hit single digits, the market went
No way we're going to
crazy.
see 5%.
No.
We would open up the doors in the morning at the branch,
Yeah.
and people our sheets were lined with appointments all day long.
Okay.
People were getting out of those higher interest rate mortgages and locking into a 5, a 7, a 10-year term at under 5%.
Wow.
Yeah.
Yeah. So that was good. That was great. And so that's the thing, though. Mentality-wise, I think the shift has happened so quickly that people are still kind of shaking their heads.
Sure,
going,
sure.
Okay, I missed the boat. If I'd bought a year and a half ago, then I could have had a 2.5% 5-year fixed. Now my mortgage broker's telling me it's going to be maybe 4.59 on a 5-year fixed. So I'm kind of feeling like that's, everybody wants the best deal, but it's still a great deal.
We have to keep it in perspective, though.
Absolutely.
Okay, 4-5% sounds great, and it did at any point in my career. Mm-hmm. But we were also paying $200,000 for a 2-story home in the Glebe.
Right.
Yeah.
So just keeping it all in,
Yeah.
and this has been, and I've been preaching this along with Kurt. If 4%'s a great rate, 5%'s a great rate. The buyer, somebody out there is going, yeah, but they're not talking. It cost me $800,000 to buy a townhome today, though. It's not. The rate might sound good, but it's the price of home. And I've been saying it, and we've been concurring.
I concurred.
I
at one
concurred at one point. He concurred it, but first-time buyers have to lower their expectations.
Yes.
It's plain and simple. They cannot go out and expect to buy a single-family home off a builder for $900,000 or $950,000. Like we all grew up buying a townhome, maybe a condo townhome, then into a freehold townhome.
Yeah, you start small and
You start small.
build up.
But time flies. Everybody goes, time flies. I'll tell you, man, at the end of 7 years, you're ready. You're going to be ready, and you're going to be able to afford that single family home.
Yeah.
So lower your expectations if you're first-time buyers. If you've got 20% down, good for you. How many people have 20% down these days? Unless it has gone up.
Yeah.
The bank of mom and dad and the
Bank of
grandparents.
mom and dad.
Okay, so
That's
let's
the reason.
explain the 20%
Yeah.
threshold just
Okay.
a little bit, right? Because it's important.
Yep.
Right? So if you have 20% or more and you're willing to put that down on your home purchase, you don't require outside mortgage insurance. Correct?
Yep.
Which means what?
So basically, if you're 20% down, you now can have an amortization up to 30 years as well.
Right.
That can stretch your mortgage payments out a bit too.
Right.
So that the payments are a bit lower.
Right.
If you're less than 20% down, then you have to pay a one-time high ratio insurance premium to have your mortgage insured. And it's factored in. You don't pay it up front. It's factored into the mortgage.
Right.
The overall mortgage
But you're
balance.
carrying it around for the rest of your time
Yep.
on that mortgage.
Yep.
Yeah.
Right. Because you required.
Yeah. Now, having
That
said
insurance.
that, interest rates are slightly better on a high ratio insured mortgage.
Oh, really?
Than they are if you put 20% down.
Oh,
Yeah, Kurt, there's
because
a-
it's insured?
yeah,
insured.
Yeah.
Oh.
It's a tiered system. So all mortgage money in Canada is insured, and here's the key. All money in Canada is insured to the investor. So let's say you're lending money to a lender to lend to a client. Your money's insured. Whether the client's paying that high ratio insurance premium or the lender's back end paying it on your behalf,
Right.
you are insured in case that mortgage defaults.
Okay.
So guess what? When a lender has to pay it at 20% down or 30% down or 35% down, whatever it is, then the interest rate's going to reflect that. Just slightly little bit higher interest rate because the lender's actually paying that insurance to the investor.
Gotcha.
Yeah.
Gotcha.
And that once people understand that, they'll be like, because we used to be able to quote rates. Like a few years ago, someone could call me, what's your best 5-year fixed? And I didn't have to ask 10 questions and have like a chart to figure it out.
Right.
Right now I do. Is it for a principal residence? Or is it for a rental property? Is it a refinance? Is it how much down payment do you have? What's your amortization going to be?
Right.
And all of that puts you into a little slot, and that tells me what all your best rates are with every single lender. Right.
Okay. We got to move on here.
Yes.
First-time buyers. Talk about investments. You wanted to talk about investments, refinancing, buy a cottage.
Yeah.
What's that all about?
Well, I'm noticing that a lot of people now want to, expand their real estate portfolio.
Sure.
Right?
Good opportunity to do it, right?
And with house prices having come up, they've built up some equity in their home.
Lot
Let's
more
tap
equity.
into that,
Yeah.
right?
Yeah.
So you can refinance your home up to 80% of the appraised value, minus any existing mortgage encumbrance. So let's just say your mortgage, let's just say your house is worth $1 million, right?
Yep.
And so you can go up to $800,000 and your existing mortgage is $300,000. That frees up $500,000
$500,000
that now you can go out and use to perhaps buy a cottage, put a down payment on a rental investment property,
Right.
that kind of thing.
Mm-hmm.
Yeah.
So on recreation properties, how much of a difference is there on a rate on a mortgage? If you're going to put a mortgage on, I might depend on where.
Yeah, so that will depend on a few factors again, Danny. So it'll depend on the location of the property. It could depend on, is it slab on grade? Is it 3-season? Does it have year-round access? That kind of thing, right?
Can you get a mortgage on a 3-season cottage?
You can.
You can, okay.
Yeah.
Private money or
No, through
Okay.
lenders, yeah.
Okay.
Absolutely.
Well,
Yeah.
yeah, because they used to be tough to do.
To buy an investment property, you have to put 20% down.
Yeah,
That's
okay.
the minimum.
Oh, is that right?
Required. Yeah, and you
Okay.
can amortize it up to 30 years. And that type of mortgage is going to have the highest of the interest rates that are offered on at the lenders. Refinancing your home is considered uninsurable money, and buying an investment property is also uninsurable money. So you're looking at probably about, I'd say 0.2%, 0.25% higher
Okay.
on any of the terms.
So
that's not
if
bad.
we're at 4.5, it's 6 or 7.
If you're at 4.5,
No.
If the regular rate is 4.5, we're at 7. Is that it would go to 7 for an investment property, like plus
No.
2.5%?
no. So right now, for example, on a 5-year fixed on investment, it's 5.25.
You're
okay.
talking a quarter point.
Yeah, quarter
Yeah,
point.
Oh, okay.
Not 2.5.
Not
sorry.
0.25. Gotcha.
Yeah,
Sorry.
Yeah, 0.25.
Yeah.
Okay.
Yep.
That's not much.
No.
Really.
No.
And it's an investment property,
Yeah.
so you're obviously getting a return.
Yeah.
So,
So we can factor in 50% of the income that's generated from that investment property and add that to your gross income. So again, let's just say the rental unit's going to rent for $2,000 a month. And as well, on an investment property purchase, appraisal is always required so we can get market rents at the same time from the appraiser. So if you're planning to buy, but you're not going to have a lease in place by the closing date, then we'll get market rent schedule that states that this property will rent from between $2,000 and $2,200
Okay.
a month. Now we can use 50% of that, annualize it, and add that back to your gross income to help offset 100% of the mortgage payments, property tax, and well, there's no heat factor generally because a lease is going to be a tenant paying that.
right.
Yeah.
In most cases,
Yeah.
yeah.
In most cases.
That's interesting, eh?
Yeah.
Do you find is there a lot more activity when it comes to investment properties than you've seen in the past, or where do we sit with that?
I would say that since the prices of homes have gone up, the break-even point is not as attainable.
Right.
So perhaps you have to look at it, and that's what I consult with clients on, that, you know, it might cost you a few $100s a month out of your own pocket to buy that investment property, but at the end of the day, you're building more capital equity into your.
You're paying
overall-
yourself.
Yeah, you're
You're
it's
paying,
like putting
but
money
you're
in the
paying
bank,
yourself.
right?
Yeah.
And now a tenant is paying off that mortgage for you,
Right.
And that property's appreciating over time.
Right.
So it's building something in your asset pool.
Yeah.
Yeah.
Have I mentioned that I've got a great investment property available to people right now?
I drove by one on, I believe it was Bay Street.
Yeah,
It was a
546 Bay
stunner.
Street. You might want to drop by there. It's actually
stunner.
quite nice.
Stunner.
A really nice place with a traditional sort of downtown 2-story with a full basement apartment separate entrance.
Oh, wow.
Yeah.
It's a money generator.
Wow.
No question about it. Or you could live in it.
Great owner occupied.
Great
'cause
owner occupied.
Oh yeah, definitely.
Yeah, definitely.
Ground floor and up top.
Definitely.
Absolutely.
Yeah, the upper 2 floors are beautiful, and downstairs is a huge 1-bedroom. Like,
Yeah.
it's
Are you
gonna rent.
getting a lot of action on it?
Starting to.
Yeah.
Yeah, it's a little bit slow right now, so that's why I mentioned it on a podcast. I mean, why wouldn't I?
Yeah.
You want to throw the address out there?
546 Bay.
Oh, you did.
Yeah.
Okay. Okay.
Did
How
I
are you-
mention 546 Bay? Downtown.
546 Bay.
Yeah. Anyway, nice place.
How are you finding the market? What are you seeing so far?
I think things are getting busier.
Last two that I had, they were multiple offers.
We need again. We're in a situation where we need more people to list their homes,
Yeah.
Yeah,
right? Again,
definitely.
and that's why you're seeing the reappearance of multiple offer situations.
Inventory
for
is
sure.
still low.
Yeah, not enough inventory. Again, we find ourselves in that situation. Of course, that's a long-term problem.
Yeah.
But I think if we can encourage our people who might be interested in selling to get their homes on the market, you know, it will get even busier. I think
Yeah.
more and more people are starting to come out, and I think if we would just get warmer weather consistently,
Yeah.
that might help.
Just like to circle back here for a sec. We
Yes.
missed mistakes to avoid.
Yes.
We didn't miss it.
Well, we were on first-time buyers and
I actually
pre-qualifying,
wanted to
and
quickly touch on first-time buyers one more time.
well, that's where I'm circling back to.
Oh, good. Okay.
Okay.
Wow.
Can I go first, or do you want to go first?
Yeah, you can go first.
Okay. Okay.
Could you guys? What do you go first?
Yeah, no, just we often talk about, and mortgage brokers and lenders inside a bank talk about, they inform their client who's buying the home what not to do before you close the deal.
Yep.
Don't change your job. What are a few of the obvious ones that you see, mistakes that they make?
Well, that's a big one, right? So
Yeah.
don't change your job. Don't change your field of of employment. In
Of
other
course.
words, okay, so you were working at, I don't know, an industry type, whatever it is.
Right.
And then all of a sudden you decide to become something completely different.
Right.
That is not even in the same field of work.
You want to
We can
build
get around
cabinets.
probation.
Yep.
Right? If you're just
Gotcha.
starting a new job, we can get around
I mean,
that.
job probation.
Yes, job probation. Oh yeah, that was a good point to mention.
There's that other probation I never
Yeah.
really enjoyed
And then
at
you
all.
need a lawyer to explain all that to you.
Right, so
you
can
don't,
get around that, but changing fields completely.
right, because anybody is allowed to continue to upgrade themselves and to
Sure.
make
Right.
sure that they've always got the best income, job opportunities galore. Great.
Just try not to do it in between the time you purchase a home and it goes firm until closing.
No, you can. I guess I should be more specific. Don't. Talk to me if you're thinking
Right.
of changing your job.
Right.
Because I'll let you know if that's going to impact your
Right.
application or not.
Yeah.
If you're going to be in the same field and you're going to be
Yeah.
earning more and everything looks great and you've been in your field for a long time already,
Right.
chances are you're fine.
Here's the other problem we run into, and this is a common one, more common, I think, than even changing jobs is, okay, oh my God, I just bought this beautiful home. I need to fill it with new furniture.
Yeah.
Yeah.
I'm going to go, there's a
Don't pay a
a
cent.
don't pay a cent event at Leon's. I'm there.
Yeah.
So I've got all my new furniture, but I may have made a critical error here.
And
Don't
Kurt,
do it.
you will likely have, because a lender has the prerogative to pull your credit score right up until the day of closing. Will they do it or won't they? We don't know.
It
but they
is
can.
a more common error than you think, or buying a
Yeah.
new vehicle.
And pulling the
Buying
credit
and as
is,
soon as they see that your credit score has been accessed, and well, by who, and you've got a new trade now. Oh, you've bought a car. Oh, the payments are $800 a month. Well, that doesn't fit into your borrowing ratios anymore.
You've
you've got to put down an extra $40,000.
so don't buy large item
Don't buy
purchases.
large-
Wait.
Yeah.
If
And
we
even
actually-
don't pay a cent. Don't let that fool you. Yeah, you don't have to pay
It's
for
still-
3 years,
yeah.
but it'll show up on your credit score right away as a balance owing, and the lender doesn't care because they know in 2 or 3 years you're still going to have to carry that mortgage payment, and now you're going to have to pay.
Right.
The
You just bought
furniture store.
$10,000 worth of furniture.
Right. So what's that payment going to be every month?
Right,
Oh,
right.
It's nothing right now.
And it
Same
throws
thing
off
for-
the numbers.
Yeah. Yeah.
Well, back to the job, we had a problem with a lateral transfer within the federal government. We had a lender, but we had about a 7-day delay on closing because somebody was working, let's say, for fisheries and took a lateral transfer to CRA with the federal government, and it didn't close.
Okay.
Didn't close. Closed 7 days later. A fool within the bank.
Yeah.
I will call him a fool within the bank made that decision. And
Yeah.
Ooh.
Yeah, because that's not
Yeah.
that's not a rationale.
no, we didn't think so.
There's no that could be escalated, and again, that speaks to who you're dealing with.
Yeah,
right?
it got escalated,
Right?
trust
But
me.
There's things, and if you have relationships,
There's
as a
less
mortgage
maneuverability on that side than there
Yeah.
is with a mortgage broker, right?
Yeah.
There's
Okay,
just
now it's your
broker,
turn.
but
less options.
less
Yeah.
options.
Yeah.
But let's face it. I mean, bottom line is no. You should make no changes.
Yeah.
I mean, realistically, what house closes within 60 to 90 days in most cases.
Yeah.
There should be really no major changes in your life at this point, other than buying boxes to pack.
Yeah.
Right.
Yeah. And telling everybody you bought a new house and can't wait to show them.
Yeah.
Yeah.
Right?
So
But
what
you
I
can
was
wait for the furniture.
Oh, wait for the furniture. They'll have to sit on those soccer mom chairs.
Yeah, for a bit. Yeah, you wanted to mention something about first-time
I was
buyers.
just going to say, when I talk to first-time home buyers, I like to keep things really positive. It's a great time to buy. Why would you not buy right now? Interest rates are low. If you find a house that you like,
Prices
house
have settled.
Yeah, prices have settled.
Yeah.
Sellers are motivated to sell now because homes are taking a bit longer. They can't just test the waters and 24 hours later they've got, X amount over asking.
Yeah.
So it's a great time to buy, and we're being told by a lot of economic forecasts that 2024 and 2025 are going to be big years again.
Right.
And people, if interest rates start to go down, and we've seen interest rates just slightly edge down over the last few weeks. So if they continue to do that through 2023 and 24, which is what they're forecasting, more people are going to come into the market to buy, more houses will come up for sale. So guess what? we've got a cycle again
Yep.
that happened a year, 2 years ago.
Oh, yeah.
Yeah.
Where
Yeah, yeah.
all the multiple offers,
And
buy now.
And
Why
don't
would-
forget the market in which you live, right? The Ottawa market is what we concentrate on. It's what you concentrate on, obviously. It's different than anywhere else. It's not Toronto, and I hear this all the time, like this is happening in Toronto, oh my God, in Vancouver, oh my God. It really has nothing to do with what's happening here. There are not national trends in the city of Ottawa. It's different. It's its own market. So you
We're
really,
blue chip.
yeah, you
We're blue
really
chip
have to
market.
think about that and consider that when you're making a home purchase. Even people who are moving to Ottawa, there's benefits to being in this community that are different from other communities, and rates are everything's different the way things work here.
Absolutely.
Yeah.
Yeah.
And one more quick thing, because I know you want to wrap up. I think what else is
Well-
important, whoever you deal with to do your mortgage for you, that you make sure that that person discusses all the options available with respect to product. Because it's not just interest rate. Interest rate is good, great.
Yeah.
Make sure that you know that the mortgage that you're getting has prepayment options, that has all the bells and whistles. I don't offer any mortgages that are no frills.
Right.
Because those are the ones if it's too good to be true, it
It
really
probably
might be
is.
too good to
Yep.
be true. What if you can't port that mortgage?
Yeah.
What if you can't you have to sell it and to pay off the
Yeah.
mortgage? I mean,
Yeah,
there could be all kinds of restrictions.
Yeah,
right?
you're not only looking for the best mortgage rate for your clients, you're looking for the best fit when it comes to a mortgage, right? And there's different products available at different companies with different lenders and so on and so forth. So it's really tailored to a specific client every single time.
Right.
So,
And their threshold for what they can withstand with respect to a mortgage.
Yeah.
Do they want a variable?
right.
Short-term pain right now, but maybe long-term gain if rates start to drop, right?
Right.
So you pay a little bit higher now, 5.7, but you know what? If rates start going down next year, you don't have to time out. Should I take a 1 year or a 2 year or 3 year? You've got that 5-year variable you can lock in at any time. That's amazing, right?
Right.
So discussing that with clients, discussing whether they should go with maybe a home equity line of credit as opposed to a fixed rate mortgage or
Right.
variable rate mortgage.
Some people can have that option.
Maybe that's a better option for
Yeah.
them so that they have more flexibility and
Yeah.
they're paying interest only right now.
Yeah, and that's why we think that, consulting a mortgage broker who has access to all of those different options
All
and
the
can lay it
products.
out for you is so important, because otherwise you're not getting a full view of what's available,
Right.
right? You're not getting all the options that are open to
What's
you.
that? What?
What's that?
What? Sorry, I didn't hear you. Oh, somebody in our audience wants to cover HELOCs, but we're never going to hear the end of it.
Ah, okay.
HELOC.
What do you want to know about HELOCs?
What's HELOC?
What?
Oh, yeah,
Oh,
you might as well
just a
bring a
second
microphone
here.
over
What
there.
would
Ladies
you
and gentlemen,
like to
Kim
know?
I just-
Faithful.
I love audience.
Yeah, Kim Faithful,
just-
ladies and gentlemen.
Thank you. Thank you.
Yeah.
I just wanted people to realize what the difference is, because there's so many advantages to a HELOC that people don't understand. Yes, the rate is a little bit higher, but you can do more with your money. It's only an interest payment. But when you pay that,
Yes.
you can also borrow that in
Yeah.
case you need a new furnace.
Okay,
All
well,
of a sudden-
we need to explain the HELOC then first.
Please do. Thank
Yeah.
you.
What's it? What, Ingrid? What's HELOC? What's she
Okay.
talking about? What's
Yeah, that's a
Kim
great
talking
point. So a home equity line of credit. It's an acronym. Home equity line of credit, HELOC.
HELOC.
Absolutely.
Right.
Okay.
Okay.
Yeah.
And
Think
so
we all.
basically, you can have the federal government allows you to have up to 65% of the value of your home in a HELOC.
Okay.
That's the max. Used to be 80, not anymore.
Okay.
65%. So again, if we use the $1 million, $650,000. As you pay that HELOC down, it becomes reavailable credit. That's great.
Yeah.
Now you want to put down $50,000, then you want to turn around and you've got a roof that you need to fix, or
Yeah.
you've got a renovation, or you know what? Maybe you've got some renovations. You want to buy a cottage.
Right.
You want a down payment.
Sure.
You could really utilize the home equity line of credit product to really make it work. And the payments are interest only. They're fully open.
So you can
you've
pay
got
as much as you want, whenever you want,
lot of
as long as you hit the
flexibility.
interest.
Exactly.
Right.
And secured
Yeah, secured
against
on the
us.
home.
Yeah.
And secure it on the home.
Yeah, secured on the home.
That's a sweet deal.
Yeah,
If
not amortized.
sure.
it doesn't work for everybody, but it could work.
And you can also lock in portions of your home equity line of credit to fixed term rates as well.
Question from the floor. Kim Faithful, ladies and gentlemen. You might as well bring that microphone over there, Danny.
Kim, Would you like to step in and sit down?
It's okay.
No, come on.
No, it's okay. I just wanted to say that you don't need an approval for your HELOC.
You don't need an approval for your HELOC.
Money.
Yes.
You can use that money to your benefit, and you don't have to ask anybody anything.
Right.
It's now your money that you can use.
Once you have the HELOC.
Yes.
Well, of course,
Yes.
You still have to qualify. So yes.
Yes, you have
Yeah,
to
yeah.
qualify
Once
for
you
the
have it,
HELOC.
though, they can't
You
take
still
it
don't
away
have a microphone over there.
Okay, let's
They
get
can't
back.
take it away from you, Kim. That is very true.
Yeah.
Once it's on your house, unless you were to default on your payments, that is on your house
Right.
forever.
Simple plan. Don't default on your payments. Right? That's how you keep your HELOC alive.
Right.
You don't want your
Any
HELOC
mortgage.
to dive.
Nobody wants
No.
foreclosure.
No.
Well,
No,
Oh, foreclosure, no good.
no good.
No
bueno.
good. Listen, here's the deal. Ingrid is, an experienced mortgage broker, and she can help you on your way. And it's the first step in the process, as we mentioned at the beginning. I can't emphasize enough that it's so important for someone to sit down, people to sit down.
Yeah.
Even if you're not just first-time home buyers, but even if you've been in your house for 7-8 years, you may want to sit down with an expert like yourself and go over your options again, because things have changed, right? So take that time, and you love talking to people. So why wouldn't you, right?
Yeah.
Why
And
wouldn't
her
you take that
contact
time?
info's been on the screen the whole time.
Well, thank you guys.
I still can't see it.
I
look
know.
every
I can't-
time.
Well, our names
don't
aren't
understand.
anymore.
Thanks so much for joining us, Ingrid.
Yeah.
Thank you for giving me the opportunity to
That's
speak.
fun, eh?
Yeah.
I haven't seen you in a while. And by the way, best to your husband, Dennis.
Yes.
He's a beauty. He's a beauty. Like he's a fun guy. I've had some good times, and even though he's a Habs fan, right? Oh, look, I'm surrounded again.
Yes, exactly.
Yeah.
Round one, baby. Round one.
I am pulling for you guys.
See? Thank you, Ingrid.
I am. I would love to see this. I don't know. I don't want to use the word curse, but I'd love to see it kind of get over that hump there.
Time to wrap it up, buddy.
Again, I forget where I am.
Yep.
This is the Broker Loaded Podcast. You can find us on YouTube if you want to watch this crazy business. But you can listen to us on all the usual platforms for podcasts,
Yeah.
right?
And the YouTube channel, the Facebook channel.
We got a Facebook page. You can
And,
follow that if you like.
Yeah. And all the audio platforms. Most have 4 or 5 of the top ones.
Right.
Yeah.
And if you got a question or a topic you want discussed on this podcast, you can reach us via email, thebrokerloadedpodcast@gmail.com.
Yep. Brokerloadedpodcast@gmail.com.
What I said. Thanks to Ingrid Patry. Listen, have yourself a great day. We'll see you next time.
Thanks, everybody.
Thank you.
Bye-bye.